Everybody, Brian here. It is Wednesday, the 16th of November, 2016. The S&P 500 consolidated a little bit here today, down 34 cents. Still above the week-to-date volume-weighted average price, which we see right here. Still above the rising five-day moving average, and kind of came into the scenario that I had outlined last night, that we were looking for a little bit of a pullback, which would be good, and consolidate before the potential to be able to continue to move higher here. So the path of least resistance continues to move higher. There's nothing here to suggest that it will break down, and I would say that as long as we remain above 217-ish, the buyers are in control and innocent until proven guilty. The NASDAQ today did improve here as well. Yesterday I had accidentally said that we would be getting rid of this data over here today. That's actually going to occur tomorrow. So first thing tomorrow morning, that first hour of the day, we'll be getting rid of this data, and that's going to be what gets this five-day moving average to turn back higher. Nonetheless, it did break beyond this little consolidation high here, so it is behaving better than it has recently. We've got the declining 50-day moving average just ahead, so that's something to be aware of. But I think that as long as this market remains above 115.50, 115.75, that we would look for continued upside in the NASDAQ. And again, probably we'll have a little bit of trouble in this area, but the path of least resistance seems to be higher, at least in the intermediate term. And obviously it does so for the Russell 2000, which is consolidating its gains through time. And as I've said the last couple days, it's no different than the strength that we saw in the semiconductors all summer and into the fall, that it's likely bringing a lot of short sellers in here who are having a hard time believing it, thinking that it has to do something, but that is pullback. But the fact is, until we see actual evidence that this market is making lower highs and lower lows below a flat to declining five-day moving average, it makes zero sense to be a short seller, and you deserve to lose your money for being short until we have actual evidence. Semiconductors did break the high end of that range, so as we said, it looked like they were going to, and that if you were long, that your stop should, if you were going to get long, your stop should be under that level. I would say today's low would be the worst the worst case stop. We broke beyond this consolidation band, and that's what we've been talking about, is the consolidations tend to resolve themselves in the direction of the primary trend, which in this case is obviously higher, and it should not be a surprise to anyone that we broke that high end here today. The biotechs are pulling back a little bit finally, and that's what I view to be a good thing. The volume weighted average price since the election, or that gap higher, is right where we closed today. So we're consolidating. We have right now a market that's had a good sized run. I'd still prefer to see it break below that five-day moving average, come down and test this level and build some strength. So I don't think it's wise to short, but if you're an aggressive intermediate term trader, perhaps if it fails something like this, then you could be short a little bit. I certainly wouldn't go aggressive on it with a stop, just above whatever the most recent relevant lower high ends up being. That is, if it rallies up and then you short it on weakness, a stop would go whatever above whatever that high is. It's not something you would want to give a lot of room, I don't think, because we're in an overall bullish market environment. We had 1,572 advancing stocks today, 1,424. Apple had more strength than I expected it to have today. When we spoke about it midday, it was right up against this trend line, and I was saying that I thought it would be a good scenario for it to pull back from there, test the five-day moving average, and then run. Right now, we are still, we've got that five-day moving average, which is currently still declining. So I still think the best scenario for Apple would be a pullback, maybe down into this area, find some stability, and then buy strength as it begins to move higher once again, if it's above the volume weighted average price tomorrow. But again, I still think that overall there are better stocks to be trading on the long side. Apple is one that gets a lot of nice runs out of an oversold condition. So running up into this 111 to 112 area where the 50-day moving average is would be something that wouldn't surprise me either.